CF Benchmarks.
What you're about to hear is a recording of a CF Benchmarks X Space captured live.
Everything on this show is for informational and educational purposes only. It is not investment advice, and nothing we discuss is a recommendation to buy, sell, or hold any asset. The views are our own and do not represent CF Benchmarks, Kraken, or any affiliated firm. Any price targets, valuations, or models we mention are illustrative and not forecasts. The participants and their firms may hold positions in the assets discussed. Digital assets are volatile and you can lose your entire investment. And some products we reference may not be available in your region. Always do your own research and consult a qualified financial advisor before making any decision.
Good morning, everybody. Welcome back to another CFB Talks Digital Assets Live. My name is Gabe Selby. I'm the head of research at CF Benchmarks. We've got a pretty strong bench today. We've got a regular as Mark Pilipczuk and myself, and Sui Chung, our CEO at CF Benchmarks, is joining us, with our head of sales of CFB, Peter Stern. We also have a very special guest, James Seyffart, who's a senior ETF analyst at Bloomberg Intelligence. James, I don't think you need too much of an introduction, but I don't know if you mind just giving a quick rundown of your background and what you do at Bloomberg.
Yeah. So like you said, I'm a senior research analyst, primarily covering ETFs, but for anyone who's in this space, I spend a lot of my time covering what's going on in the world of crypto and primarily any overlap between crypto and the ETF or fund space, and really any overlap between TradFi and DeFi. Though at Bloomberg Intelligence, we have a lot of people that, write research on various industries, and we've actually hired some people to cover crypto more directly than even I am. So Bloomberg has, kind of bought in to try and figure out a better way of covering this stuff. That's me. I spend most of my time covering the ETF space, primarily in the US, but globally as well.
Yeah, and I just have to say, it's been amazing to see, over the past few years since these ETFs have come out, the following that you guys have all gathered in the community because of the significance of the ETF wrapper and what it's done to the industry. And I think everyone is really following closely all your research. I love to read it as soon as it comes out. We're gonna talk a little bit more about some of your latest pieces later on the hour or throughout the hour. And it's going to be, I think, a pretty fun conversation. But first, I think there's a lot of, pressing things that are happening in the markets right now. Of course, we had the May PCE came in hot. Headline was 4.1% year over year, 3.4% for core. That's the fastest since April 2023. Real consumer spending is accelerating. I think it rose 0.3%. So it's just showing how much the consumer is continuing to power on. But the second thing is really what I want to dive into first is kind of like what we're seeing with Bitcoin markets. Or with crypto markets overall. We're seeing a lot of selling pressure this morning, continuing from yesterday. We're now, I think, a 50+% drawdown from Bitcoin's all-time high. We're seeing MicroStrategy stock continue to crack. It's preferred. The stretch shares are now trading, I think, at 76 on the dollar. So I think the question this morning that we're all kind of asking is MicroStrategy breaking the Bitcoin market? Is MicroStrategy breaking the crypto market? And that's where I kind of want to kick things off with the discussion. And maybe Sui, I want to throw this one to you first. Yesterday's event where we saw everything kind of selling off very aggressively with crypto. Do you think this is a contained single name repricing of a company's cost of capital, aka MicroStrategy? And what are you seeing as far as like the contagion impacts between Bitcoin and MicroStrategy right now?
Yeah, thanks, Gabe. The contagion, I don't think it's direct contagion, but I do think that MicroStrategy and its various issued securities, Stretch, Common Stock, etc., and their performance is probably the single biggest narrative driver for Bitcoin right now, if that makes sense. That's the thing that people can probably are pointing at the most for an indication of where the market is at, and hence is feeding negativity, because obviously those Stretch, the common stock of strategy, are both under pressure. And absent any other direct drivers for Bitcoin, that's the thing that people are looking at. and trying to draw some conclusions. I mean, not least, for very good reason, not least because obviously Strategy is the world's single largest holder of Bitcoin, world's single largest corporate holder of Bitcoin, world's single largest holder of Bitcoin. So that all makes sense, but I think it is in large part due to the absence of any other indicator and absence of any other news or narrative.
Yeah. I agree there. I think MicroStrategy is a lot of it's what's going to catch a lot of the headlines because it holds so much Bitcoin and it's issued all that preferred stock through Stretch. But if we look at just MicroStrategy's balance sheet, they're sitting on about 1.4 billion in cash, which is roughly 10 months of that dividend they have to pay on Stretch. Now, if you look at what management has said, they said that they'll hit the ATM to raise cash when their MNAV is above 1.2. If you look on their website as of yesterday night, it was at about 1.08. So should they run short on cash, logically, selling Bitcoin would be the most efficient thing. But I think that's mostly just the easiest thing to cover in the headlines. If we look at other things that have participated in the debasement trade this year, like gold, that's down from 5,000 to 4,000 as well. So we're in an environment where globally central banks are tightening and liquidity conditions are going to get a little tighter. And that's ultimately what's probably driving a lot of this move.
James, I want to get your take on this. I'm really interested to know, given the runway that MicroStrategy has with its cash reserves, I think there's a clear decision that they'll have to make depending on what the price of Bitcoin does over that period. If it continues to kind of sell off or go sideways, they might have to make a tough decision. Do they cut their dividend or do they cut their Bitcoin holdings? What do you think is most probable?
Honestly, I have no idea what they're going to do here. They've kind of backed themselves into a corner with this. I get the whole idea of what they're trying to do. My main concern over these things is like sometimes they kind of equate them, like they compare them to money market funds and things like that, which is like I hear that and I'm like, stop doing that. Stop even putting them in the same chart as money market funds. These are not money market funds. But yeah, I don't know. I'm one of the things I've been saying is like I wanted to see him as they were raising assets and raising money. Like I would have been more interested as the demand go up rather than issuing new shares. I would have liked to see like, well, what happens if they lower the yield potentially? So I would have liked to have seen that already, I guess, but they were just more interested in acquiring as much Bitcoin as possible. Who knows? I mean, I don't have a crystal ball. I have no idea what the future is going to be, and I have no idea what Saylor and the rest of MicroStrategy or Strategy are going to do.
I mean, lowering the yield is kind of like you would, I guess, lower the coupon, or I guess you'd lower the amount that you'd pay out. And I think that's in large part what the market's trying to price in is that, I think if I had to pick between the two, I think MicroStrategy would cut the dividend before they would start selling their Bitcoin holdings. And if you've got something that should be trading, at par at 100, then if you want to maintain that yield, then you just have to price that thing lower. And that's kind of like what we're seeing it trading at 76 cents on the dollar right now to its indicative par of 100. But what we're seeing right now, I think, is like this emergence of like what this digital credit preferred risk premium should be, right? So if you've got risk premiums in the markets for digital credit, in this case, we need to assign an appropriate risk premium, and that's largely dependent on the underlying asset Bitcoin. And as Bitcoin has kind of failed to measurably break out to the upside again, we've seen sellable rallies happen over and over again. I think that it kind of makes sense, really, what we're seeing. I think in the preferred shares first, and getting that re-rating down. Peter, I don't know if you want to jump in and give your 2 cents on what you see here with MicroStrategy and its preferred shares.
Yeah, no, I mean, you guys covered it well. I think that it's just been kind of like from a Bitcoin price standpoint. Obviously, MicroStrategy was all over it's been all over the headlines, and kind of I think it's been steering a lot of the like Bitcoin price in general. But also, I think it's changed a little bit. I'm obviously hearing people a bit less bullish about it, but it also, I think, kind of opens the doors for, I think a lot of people were using that as their way to technically access Bitcoin. versus like directly buying the spot ETFs or different types of vehicles that give you Bitcoin exposure. But yeah, I mean, I'm kind of curious where kind of MicroStrategy goes next, but it'll be interesting to see.
And I would also say, I think a lot of this like is indicative of me that there was some sort of like people were using leverage to get exposure to these things, right? Like this sell-off is
Yeah.
not just like some people were holding, stretch or whatever, and they sold off. Like they were probably looping it in some way, like borrowing against some sort of carry trade, and it kind of blew up on them. So that's my understanding, like my view of like likely what happened. I don't know how or we will ever get like the hardcore definitive answer that that's what happened here, but that's my current stance on what I think happened. I think somebody had a lot of money in here, they were levered against it, and it went against them and kind of blew up that trade.
Sui, from your perspective, as kind of the CEO of the leading digital asset index provider, you've got this massive digital asset treasury company holding, I think, around 850,000 coins. The ETF complex has grown to about, I think, 1.3 million and some change. How are you seeing kind of like there's reflexivity in this market cycle compared to previous cycles, just given the way that these things have kind of consolidated up into these two packages between the DATS and the ETF wrapper?
Yeah, that's an interesting question, Gabe, because obviously, I've been CEO of CF Benchmarks since 2018, so I've seen a few cycles. History doesn't repeat itself, but it rhymes. Over the years, Bitcoin has been cyclical, and right now we're experiencing one of these drawdown periods. And does it feel any different, given that certainly in the last cycle and the cycle prior to that, there were little or no ETF assets. There was no such strategy held some Bitcoin, I think, at the onset and through the last bear market, but by no means this amount. And it doesn't. These two twin poles of significant Bitcoin holdings, they seem to have brought down the volatility relative to prior cycles. So the high this cycle was early October. So we are now 8 months. 8 months past that point, 8 and a bit months past that point, and Bitcoin is just over 50%, has experienced just over a 50% drawdown. So if you look at 8 months after the peak of the previous cycle, so the previous cycle peaked in November of 2021, so 8 months after that, late July, I think Bitcoin had drawn down something like 70%, 70+%. So if you just take it like that, I'm very naive for sort of timeline and history repeating itself, then yes, you're seeing it's significant drawdown. But the difference this time versus last time is that the drawdown isn't as steep and hasn't been as vicious, hasn't been as volatile. And is that down to the fact that you've got such a substantial amount of Bitcoin being held by strategy and the ETF complex? Probably. That's the biggest difference in the holding landscape this time versus last time. So I guess, again, it's a very naive view. I don't have huge amounts of empirical evidence other than what I've just shared, but that's the way it feels. If you look at the landscape, everything is similar-ish apart from those two. I guess the other element is that we haven't, in this cycle, seen any systemic failures. So there's no Terra Luna, there's no FTX, etc., etc. It is we haven't seen that side of things. We haven't seen those events add to the market stress.
Yeah, I think one thing that Mark said earlier was really interesting is that the guidance that MicroStrategy's issued out as far as whether MNAV is going to determine whether or not they're going to issue more or go to the ATM machine. I guess one thing that I'm going to be following closely is just what does this look like? What does the picture look like in markets once you see these DATs shut off their issuance engine? I think we're getting to that point right now. And the price action that we're seeing right now, where we've seen it retrace down into the 50s again. And that's important because for me, if you look at the price chart of Bitcoin, go back to 2024, March or early spring, you'll see how, once these ETFs became live, you saw a lot of displacement moves up that created a lot of imbalances. And that zone has just been respected over and over again on the price chart. And we're in that zone again where there's a lot of support. I put a chart up on my X if you want to go check it out. But this is kind of like I think an inflection point for markets if we want to see another catapult out of this zone to get us to higher levels, or if we break down and actually go through it. The reason why this is so tricky is because if you saw in 2024, we actually kept retesting this area over and over again for about like 6 months. So you had to be very, very patient for things to kind of materially move upwards. And that's just it's going to be interesting because we do have so many different dynamics than we did back then with these DATs, with all these treasury companies. James, I wanted to bring this back to you and tie these two stresses together. You had some research that flagged ETF holders are underwater for the first time in this down market. I think their break even was somewhere around 82,000. You can correct me if I'm wrong. And we've seen about $6 billion in outflows over the past 30 days. So I guess are we seeing kind of like this accelerated capitulation with the ETFs? Are they no longer are they becoming kind of the marginal seller in this environment? What are you seeing, I guess, from your seat?
Yeah, all those numbers you said are exactly correct. That we have like a cost basis somewhere around 82,500, depending on how you calculate it. So obviously, current prices dipping into the 50s. They are well underwater. They've pretty much been underwater since that first crash in January. And the last time that happened was like back in the summer of 2024. So yeah, I mean they're underwater. We've seen consistent selling. Basically, when I look at the chart, right, we saw this huge drop off after October 10th. I mean, everyone's very much aware of what happened. That's where things peaked when you look at cumulative flows, assets, any sort of numbers that you would measure, Bitcoin ETF assets or ETF statistics or any crypto ETF statistics. For the most part, it peaked around 1010. It bottomed at the end of February, actually. And then we had a pretty strong growth from the end of February to the beginning of May. And now we're actually below those numbers that we saw from the beginning of the end of February. So we've gone down through those previous lows. And now, so we peaked at about $63 billion in inflows for the Bitcoin ETFs. Now we're looking at about 52.8. So we've seen
It's pretty
almost
staggering.
10 billion come out. Yeah.
Peter, I wanted to get your take on this since you're work very closely with a lot of the asset managers that you cover. What are they saying in this type of market?
I mean, and you and I handle a lot of these calls together, which has been great. It's
the mic might be cutting out. Can anyone else hear Peter?
I heard him. He was fine.
Oh, okay.
Yep. Gabe, can you hear me okay?
Yep.
Okay, cool. Yeah, I mean, honestly, overall, I would say a majority of the institutions that we speak to, they have not been overly negative on crypto. Bitcoin too, especially. Obviously, we've seen significant price drop, but yeah, I mean, it's the people, I believe, from the institutional space are at least less concerned than a lot of the headlines say. I think a lot of the retail market is been selling off quite heavily. I think, and a lot of it is the whales that hold large positions that are trimming Bitcoin exposure, but actually moving that over to different crypto assets. But from an institutional perspective, most of the clients or prospects we speak to aren't that negative about it. And honestly, I think that, again, and I spoke about it last week, talking with David Lawant, brought me back to Bitwise days of, it is a risk asset, and it's very risky. It's very volatile, and it's very liquid. So a lot of people, especially from the retail side, are trimming their positions as the market's gone down. But institutions overall, I would say, if anything, I went to a Solana conference last week in Chicago, and it was extremely positive. So the institutional markets, I think, are still very positive on the space.
Yeah, that is a dichotomy that I've also noted, is just this divergence where you get these kind of, when you're privy to these conversations that you're seeing with these institutions, they seem to be pressing forward, full steam ahead with their crypto plans, with rollouts into whatever verticals they're trying to go into, whether it's issuing out ETFs or trying to build certain products, from retail layer to institutional layer. That just keeps on accelerating. And so, yeah, I don't know, James, are you? You seem to also agree with that sentiment there.
Wait, which sentiment specifically?
That we're still seeing the institutions just continue to ramp up, despite the fact that you've seen such a negative kind of like environment in markets.
Yeah, I mean, I think there's a few things here. So when you look at the other newer crypto ETFs that came out, there's two things I would say. One, if you look at Hype, Solana, XRP, we talk about outflows from Bitcoin. There's also outflows from the Ethereum ETFs. But those other three I mentioned are actually seeing inflows or at least not seeing outflows. So people are probably right-sizing these in their portfolio. So I think that says one thing, that the people, like, for the most part, investing in these things, they're not like aping 30% of their portfolio like a lot of crypto natives are into some of these coins. But also, like, I was at Consensus, and we've been at other conferences, like, all the institutions are on board. Everybody I talk to, like you're saying, I'm sure you guys, you're talking to plenty of other people looking for indices to benchmark their funds against, or portfolios, or whatever they're doing. There's a lot of building happening behind the scenes. Like everyone I talked to in TradFi, whereas like 5 or 6 years ago, there was a lot of people that thought this was all stupid and pointless. And now everyone I talk to has some sort of a narrative around what they're trying to do with tokenization or getting involved in the space of crypto. They're kind of like looking at this pullback as like, yeah, this is just standard. Every 4 years, it kind of happens. We understand it's volatile. It's going to have major pullbacks of 50+%. And it's just kind of accepted, and everyone is building. Like every asset manager is behind the scenes working on this. And you come to, crypto Twitter, you just look at prices, and like the narratives I hear from the world of TradFi do not line up with what's happening in the DeFi worlds or on crypto Twitter. And I think part of that also might have to do with like, people didn't build these crypto and DeFi rails so that TradFi could come in and just use them. They were trying to displace them, and it seems to not be happening. So there's like this little bit of a loss from the cypherpunk ideals that Bitcoin and crypto kind of started with.
Yeah, that's a really good point there at the end. And speaking of asset managers and those that we work with, I think we got Ryan Rasmussen, our head of research at Bitwise, who also just jumped in here. Ryan, can you give us a quick sound check?
Yeah.
I'm not sure if
can you guys hear me?
Yeah, loud and clear. I'm not sure if you just heard James's point. I thought it was a pretty interesting point. I was just talking about how I guess that cypherpunk culture is kind of getting lost as we see kind of like these institutions come in. Didn't know if you had any takes on that, or if you wanted to just give a high level overview of what you're seeing, since you are one of the institutions that's building right now in this kind of bear market environment.
Yeah, happy to, and love the conversation so far. Look, I think it's inevitable that the market is changing over time, right? Bitcoin started as this cypherpunk niche asset that was discussed and traded on internet forums, and over the past nearly 20 years, it's transformed into this global, trillion-dollar asset that's held and traded by the largest financial institutions in the world. In that time period, you're going to lose some of those early values and gain other things. One of the things you're gaining is the next buyers and market infrastructure and liquidity and all the things that go with that. And so I think that's just the price to pay for this thing to grow into $1 trillion asset. And I don't think personally that's a bad thing. People might say I'm biased, of course, working for an asset manager around crypto products, but if we want these things to be used around the world, if we want people in countries that have limited access to financial markets to be able to access assets like Bitcoin, like stable coins, like tokenized equities or private companies, then this is the price you pay for that. It's a trade-off. I will say, like, zooming out, I completely agree with what James was saying in terms of We spend a lot of time at traditional finance conferences speaking with traditional investors, and they are remarkably, in this downturn, they are remarkably bullish on the long-term trajectory of crypto as a technology and as an asset class. Of course, right now they're heavily focused on equities and the AI boom and the SpaceX IPO and the upcoming AI IPOs. But nonetheless, like when we go to these things, there are people that come up to our booths or sit at our tables during lunches that are asking really good questions about stablecoins, tokenization, Bitcoin, etc. I mean, BCG, for instance, right? Boston Consulting have just put out a projection that said that tokenized assets are going to grow to 88 trillion by 2035. Like 88 trillion is such a crazy number. I actually can't even think of the right analogy to describe how huge it is. And it's of course less than a quarter of a trillion today. So like that type of growth gets the attention of traditional investors no matter what, right? And the fact that you have Wall Street, the biggest institutions in the world, putting out these numbers adds legitimacy to it. And then you see on top of that, Goldman Sachs, BlackRock, UBS, all of these major institutions actually building tokenized products and platforms, the New York Stock Exchange, NASDAQ, et cetera. These are real things that are happening. You have Stripe and Visa and MasterCard spending billions of dollars on stablecoin infrastructure. You see stablecoin growth. You see stablecoin payments and transactions growing. Like all of those things, regardless of what's happening with Bitcoin or other price action, are net positive long-term catalysts to where this industry is heading. And those are the things that long-term institutional investors think about and look to. And so I do think, of course, there's pain in these prices. I'm not, I know I'm painting a rosy picture over the long term, but in the short term, we're in for some pain or feeling it now. As James mentioned, people are underwater on the ETF purchases. They're underwater. I think it's like the highest all-time high in terms of Bitcoin at loss, right? So there's a lot going on here in terms of negative sentiment, but the long-term catalyst and structure and trajectory is incredibly bullish.
No, thanks for that. Mark, Peter, I didn't know if you wanted to add anything else into this discussion with regards to what we're seeing in the divergence.
Yeah, I think one of the biggest tells here, if you want to look at the long-term utility, is actually looking at what's been happening on Solana dexes just over the past few months. We've actually seen tokenized equities on Solana begin to outpace the amount of trading volume that we're seeing on meme coins on Solana. So if you think about like why that's important, if you look at meme coins or you look at the P&L of every user on Pump Fund, that's a net negative. So you don't want to have a blockchain where your primary product is essentially a way for people to lose money. Once you see people trading more legitimate investments like equities on there, that's a bullish sign for where we're headed. And that's the type of activity that you want to be looking for, is what are people actually doing on chain during this? Where are people building? Because that's ultimately where the capital will rotate back to when it flows back into the space.
Yeah, that's a really good point. I was really excited to see that catalyst kind of form from a fundamental standpoint with Solana. It's always been kind of, just this meme coin centric blockchain where we saw that peak in utility happen in early 2025. And it's just been kind of, I think, been a headwind ever since without any sort of fundamental catalyst. But that's true. We're seeing that conversion there. Tomas, I think you are also just joined. Here is our chief economist at Kraken. Can you give us a quick sound check?
Hey, yep. Can you hear me okay?
Yes, yeah. We're just discussing ETFs and everything that's going on around products and some of the divergences that we're seeing between the institutions and the sentiment in markets. But I have to kind of jump back to James here because it's very rare that we get somebody like James. And I want to ask him a little bit about XRP. I think you had a great note on XRP ETFs. They saw $1.6 billion, even with price down 40%. Of course, they had a lot of basis yield, but that seems to have compressed. Is this going to be like a retail sticky conviction on these single asset token names, or is XRP kind of unique in that sense?
Yeah, so there are a few standouts, namely Solana, XRP, and Hype are the three that I'm looking at, of like aside from whatever else. And for the most part, they're not really seeing outflows. Like I said this a little bit before, they're honestly they keep seeing inflows no matter what's going on with the price. So the XRP army doesn't seem to care about anything that's going on with whatever may be going on with the price of XRP itself. So yeah, I mean, and you, like you mentioned, the basis trade was huge for these things initially. It was actually very profitable, and then much like Bitcoin and much like Ethereum, for anyone listening who doesn't know, the basis trade is basically what hedge funds or anyone can do is they would sell the futures contracts and they would buy spot. In this case, a lot of the TradFi institutions, think big hedge funds, trading firms, they will use the ETF as the spot portion of that trade. So there was a point over the last year or so where a lot of these ETFs saw meaningful inflows, mostly that were like not necessarily I'm going long Bitcoin or I'm going long XRP or Solana or whatever it may be. It was largely using them as the long leg of a basis trade. But that basis yield has pretty much gone away for all of these assets. There is you need the futures market to be in contango, aka the futures market to be pricing above spot, and we haven't seen that. So all of these flows that we're seeing, for the most part, are not anything related to the sort of basis trade. So yeah, when I'm looking at these things, I see a lot of strength in Hype. I see a lot of strength and support in Solana, XRP. So there are bright spots. And then one thing we didn't even discuss is like I also think, once we get through this bear market, assuming we do get through it, I would think that basket type products are going to do exceptionally well, because a lot of advisors like the idea of not necessarily I'm going to pick XRP or Sol or ETH or what have you. I'm just going to buy a basket of these things and let some manager like Bitwise on here, or an index provider tell me what to hold.
Yeah, that got a lot of good reactions there, I think, with the audience. So I would agree with that, and it is interesting to see, I think, how XRP has continued to sustain inflows despite the basis compression, because we know with Bitcoin particularly we had a lot of outflows once the basis started to compress, and we saw hedge funds exit. Are you going to be tracking the 13Fs, particularly with XRP, to see kind of if this truly is just a retail demand, and that the hedge funds really aren't really able to move the price like they were with Bitcoin?
Yeah, so I do track the 13Fs every quarter. Unfortunately for people in crypto, TradFi is a lot slower. So the 13Fs are filed, so we know exactly who holds these ETFs, and we look at an aggregate for every individual asset ETF. So when we look at XRP, you can kind of see exactly what's going on. The problem is, like, the most recent information we have is as of 3/31, so we know who held as of 3/31, but we don't get that information until the middle of May. So it's kind of stale when you're used to looking at crypto, but for the most part, XRP is heavily retail. Solana had a lot of institutional buying, but like I said, there's been buying in both of those things. And right now, you can look at a breakdown of like the number of holders we have across these different four assets. I'm going to be adding Hyperliquid once we get the second quarter data, which obviously won't end till for another 5 days or so, and then we won't get the data till the middle of August. But we'll be covering that as well. But obviously, XRP and Solana launched into the bear market, which we didn't really address. Like, they came into the bear market and still took in billions of dollars, both of them. Though XRP
How
is much heavily
significant?
retail.
How significant is an ETF for an ETF to bring in billions of dollars? Like what you just said. Like, how big of a deal is that? Since you're someone who just really understands the history of all these product launches.
Yeah, I mean, so there's two ways to look at this. When you're just looking at an ETF, everyone, like, when Ethereum came out, when all these other assets launched, everyone was kind of like comparing them to the Bitcoin ETFs, and like, these are doing nothing. And it's like, the Bitcoin ETFs are the biggest launch of all time. The Ethereum ETFs are arguably the second biggest launch of all time. We do have DRAM, which is like memory and AI related, which actually beat some records that IBIT and Bitcoin ETFs had broken themselves. So we'll see if that continues. I doubt it will get to the same numbers that we saw with some of those other ones, but all of these launches have been extremely successful in the aggregate. For the most part, all the ETFs that launched are going to be large enough to be profitable on their own. So you have to take a step back and say, just on an ETF basis, these are successful launches. If you're an issuer, you're happy with what's happened, you're happy with the money that's come in, you're happy with the trading volume. But the other thing is, like, I try to like right size how well these things are doing compared to like the size of the underlying asset. Like, obviously Bitcoin should theoretically have more flows and assets and interest than something like Solana or XRP, even Ethereum, because it's a much larger asset. So when you right size it, you would actually say that like the performance of these things in the first few months is actually comparable to what we saw with Ethereum and the Bitcoin launch. Technically, Ethereum actually had outflows when it first launched due to the Grayscale product seeing some outflows, but overall, I would say no matter how you slice this, these are mostly successful. There are some assets that went to the ETF wrapper that haven't been too successful, some meme coin ETFs and things along those lines. But for the most part, we're seeing interest in these things. And I like I said, I keep going back to this. I'm mostly surprised that we haven't seen outflows from the XRP and Solana ETFs. That's genuinely kind of shocking to me.
Ryan, I see you given the 100 emoji, so I want to get your take on this. What do you say to James's comments and all that? All the strong inflows.
I completely agree. I think a lot of people it's funny to think about, like, someone who's comparing flows into the Ethereum ETF against the Bitcoin ETF, or the Solana against Ethereum, or is it like, as James mentioned, these are such different sized assets, and ETFs are only going to capture a certain percentage of the asset, and it's going to be somewhat relative based on market cap size. So like it makes sense that the Ethereum was less than Bitcoin, Solana was less than Ethereum, etc. I know, at Bitwise, we've seen really strong flows into Solana and into hype ETFs. We've also actually seen pretty strong numbers around our Bitcoin ETF as well. Ethereum struggled, certainly. I think Ethereum narrative is kind of lost right now. But certainly Solana, even in October and November, was seeing really, really strong inflows. Hyperliquid, of course, launched last month. Really strong inflows. I think that's reflective of where the market's headed over the long term in terms of non-Bitcoin assets. I think investors are caring more and more about differentiation, about fees and revenue, about monetization of this underlying technology as the industry kind of moves from early stage startup mode to how are these things going to grow and monetize and deliver value to investors. I think they'll care about things like fees and buybacks and growth rates, right? And so, unfortunately, when you stack those things together, Ethereum doesn't look great. Of course, it has strong adoption, but how will it monetize that adoption and pass that on to investors is very unclear. I think there's paths to do that, or I think if they looked into fee schedules and things like that, then adjustments there, like perhaps they could become more competitive. But when you take a step back and look at what's Hyperliquid doing, what's Solana doing in terms of focusing on profit for investors and seeing product market fit, it's kind of unmatched against Ethereum right now. I say that as a long-term in Ethereum, or a long-time Ethereum investor and whatnot. But yeah, zooming out, I think the ETF flows will largely go towards index funds and Bitcoin ETFs over the long term. Look, like we have the Bitwise 10 large cap crypto index. It tracks the top 10 crypto assets by market cap. It's been around since 2017, and investors like that approach. I think as you see more and more investors get into the space and they just want to have broad exposure to crypto, they'll buy index funds. They do the same thing in equities markets, right? And so instead of having to pick winners and losers, like should I pick Solana or Ethereum or Hype, or should I just own Bitcoin? You just buy an index fund and you have exposure to all of those. You get the XRPs as well. So I think that's where we're headed. It's the same as every other asset class. Index funds are the bread and butter. I mean, look at like what Vanguard's built over the years in terms of like low cost index funds, right? That's, I think, where we're headed as well.
Tomas, I know that you track the flows very, very closely along with MSTR buys. What's your read, I guess, currently on what's going on with the markets and the sell-off?
Oh, it's awful. I mean, I'll give you some stats because I was looking at it last night. It's kind of interesting. So this is the period between May 15 to June 23, so a couple days ago. 26 trading sessions in the market and equity markets. 23 of those saw outflows from Bitcoin ETFs. So about 90% of the sessions. We've had $5.5 billion of outflows during negative days and $100 million of inflows on positive days. So overwhelmingly skewed towards sell side. And when the selling is happening, it's pretty strong. That has decelerated. So since the SpaceX IPO, which was about 2 weeks ago now, we've only net sold about $400 million of Bitcoin. So of that 5.5 billion of outflows, 5 took place leading up to IPO. So it's been decelerating as the price level has fallen, similar to what we saw in February. The difference is that around this like November, February period, the last like 8-10 months or so, MicroStrategy was consistently picking up a lot of the slack where Bitcoin ETFs were selling. And looking in the current environment we're in right now, the issue that I have with MicroStrategy is that they're completely sidelined. So where the Bitcoin ETFs have turned into strong net sellers, there is no counterparty amongst the 2 biggest buyers of the last 2.5 years to offload that risk, except for like long-term holders or people who've been in the crypto markets for a long time that are now starting to see kind of like a line of sight towards starting to accumulate, because you have a lot of people who are saying, hey, the tide turns third quarter, fourth quarter, I'm going to start allocating. Or, hey, we're below the 200-week moving average. Historically, that's been a great hit rate for a long-term investor. I'm going to start allocating. So I'm starting to see that buyer come into the market and maintain some balance. But yeah, I think MicroStrategy right now being sidelined is a big deviation from the move down that we saw until February, where they were able to kind of bail out the ETF selling.
There's a lot of competing narratives in this market. Well, I guess there's really just one big elephant in the room, that's AI. And you've got a great chart that you've been updating, which is the DRAM ETF flows, and how that's kind of compared with the crypto ETF flows. And that's a pretty impressive story to tell in itself. It's obviously difficult and impossible probably to directly tie these two things as competing, but I mean, you have to at least consider the fact that this is a very successful thing, like what James was saying. The DRAM ETFs is continually breaking some records that even IBIT set, and there's just only so much capital to go around, and so you have to consider that as a real kind of headwind in Bitcoin's kind of and kind of its board of what it's playing in, because it's got to deal with that. So I don't know if Tomas, you wanted to elaborate a little bit more on what you found with that, or what's going on with DRAM and ETF flows.
I have this gut feel that the capital rotation thesis like does exist. To your point, I can't measure it. I wish I worked at one of these brokers to see like how the flows shift amongst their own clientele. But yeah, to your point, DRAM's breaking records that the Bitcoin ETF set 2.5 years ago. And with the SpaceX IPO, like I mentioned before, all that heavy selling we've seen in ETFs over the last month took place in the weeks leading up to the SpaceX IPO, and since then the selling has decelerated. And so I do think that one other thing to consider is that the monetary policy outlook in the last couple of weeks has also shifted dramatically tighter. So if you had like an upside case built around hey, oil prices are coming down, we're going to get back to an accommodative trajectory, that's been delayed and extended, at least how the market's telling you. And
Yeah.
so for crypto, it's kind of like a double, triple whammy at this point. There's just more interesting zeitgeist for people to allocate money towards that are performing well, and some of the biggest catalysts around like monetary backdrop continues to disappoint, which is a big, I think, upside catalyst for Bitcoin. What we're left really right now is the Clarity Act, but that's a whole separate other topic.
James, I see you got your hand up.
Yeah, I was going to say, I agree with everything Thomas said. I mean, no matter how you slice it, Bitcoin is an attention asset. It's a momentum asset. And right now, all of the attention, obviously, for better or for worse, but obviously for worse for crypto, has been on space and AI, computing, memory, anything along those lines. We see it in ETF filings, ETF launches, ETF trading volumes. We saw it with the SpaceX IPO. We've seen it with OpenAI and Anthropic likely IPOing in the coming months. So like right now, all of the attention and like there's no other way to slice it. The attention is going to those things. And we see it no matter how you look at the data, it's very apparent. So I think that is obviously taking away from it. And obviously, as Thomas kind of hinted at, I mean, clarity is a potential catalyst that will draw attention, but it's still like I look at it and I see Lummis talking about it potentially happening, but I just feel like it's so far off at this point, or it's not. It's just people just don't seem to care about it. All people care about is AI and space, and that's what the ETF flows and even launches and filings are showing too.
And that monetary regime, I think, is something that really is going to be a continuous headwind. We just got inflation data today that kind of confirmed what we all suspected, and that's something that I wanted to throw back to you, Tomas, just to get your opinion. Is it fair to grade these reports, like a May report on PCE, with the same significance as any other typical May PCE, given the fact that we know what's happened with energy prices since? Is it a stale report? Should we be able to look through this?
I think we should be able to look through it, but the problem is that you're going to be waiting until August because I'm actually very constructive on the fact that oil prices have come down so significantly despite the headline volatility around this like negotiation process. Because if you look at it, we're within the same price levels that we were during the first week of the outbreak of conflict. And so
Yep.
that gives me some confidence that the market is telling me that, hey, despite like all these contradictory statements flying around and, is there a negotiation? Are they pulling out? Are people going home? Like all this stuff, this discussion, it seems like the oil market believes that we're on a constructive path forward. But you're not going to get like a full month of data until you get through July, and that assumes that that by the time July hits, that one, oil prices aren't going to shift higher again for any particular reason, and two, that things like refinery prices or margins are going to get to a place where gasoline prices actually come down again. So I think the problem that we have is even if you believe that it's a stale report, like the next quote unquote more effective report is probably months away. Like I think August at the earliest, covering July, and possibly into like September covering August. So it's just a very kind of binary situation built around this Iran situation, and I think the Fed came out very hawkish in tone, but in practice, I was reading something or listening to something Arthur Hayes mentioned that I actually think is a worthwhile point to make, which is if they believe in price stability or they feel like it's such an urgent issue, they could have taken action, a couple weeks ago, and they didn't. And the announcement of like creating these committees that are going to come up with proposals into the fall and like recommendations that they can start to action in some ways to me feels kind of like a delay and extend, and let's just see what happens with Iran oil prices and how it starts bleeding into inflation numbers for the next few months. But I think the market is really impatient right now, especially when you have sectors that are doing really well, and they're just very unforgiving.
Yeah, I mean, look, it is kind of interesting to see with everything that's happening all at the same time. You've got a new Fed chair, you had the end of this war kind of all happening around the same few weeks, right? As far as like a timeline in the story. One thing that I'll go ahead and give James's company a shout out here is I'm following this really closely is the Strait of Hormuz tanker vessel crossings on the Bloomberg terminal. This thing is still not quite where we were at before the war began. I mean, we've seen you would average, somewhere around like 70 vessels coming through the Strait of Hormuz on a daily occurrence. That fell to basically zero, maybe one or two throughout the war, and it's still, hovering around the low 20s. So it's really kind of interesting to see how much we've seen this progress on oil prices coming down, on gasoline prices coming down for the consumer. And if I had to make a bullish bet here or make the bullish case for the economy, is that you're seeing real income start to grow again. And that's going to be significant. And that was in the May report. Remember, the May report had the impacts of higher gas prices, and you still had higher real wage growth, real income growth, I should say. And so you should expect to see that momentum, I think, continue throughout the summer, where incomes maybe continue to outpace inflation. At the same time, you'll have headline inflation coming down, as we've just seen. And I think that might surprise people. It might actually start showing up sooner in the official data releases. You might see, more constructive readings here, peak rates, peak inflation starting in June. And if you look at the markets and what they're saying, look at the 1-year inflation swap, pull that thing up, it's falling like a rock. I think it's down in the 1.8 area range. So that's what the market's trying to tell you where inflation should be pricing in 1 year from now. And I think if you've got a new Fed chair who wants to start shifting the conversation, maybe from rate hikes to rate cuts, one thing that I would do is do the jawboning now. Talk tough now to the markets. Tell them that I'm ready to step in and really crush inflation if it gets out of hand, and then wait and see how things shape out over the summer, and then you can start to kind of shift your verbiage and maybe get to a more, I'd say, easier stance on monetary policy. But that's just kind of like where I'm thinking, and I think we're getting pretty close to the top of the hour, so I want to respect everyone's time here on the call. James, one thing that we do at the end of every X Space is we do kind of a fast round on what are the key things, or what's maybe the one or top 1 or 2 things that you're watching for the next 7 days, the week ahead. So I think it's time to kick that off to kind of close things up. I want to start with Mark, since you are a regular, and I want to give James a little extra time in case he wasn't prepared, but I'm assuming he probably is, and then we'll shift it to Thomas, then we'll go with James.
All right, yeah. So for next week, the thing I'll be probably watching the closest to the jobs numbers to see how the labor market's looking, as well as I'll be monitoring the ETF flows and any MicroStrategy flows pretty closely as the price continues to draw down here.
All right, Tomas, you're up.
Yeah, I think for me, I continue to treat the ETF flows as like the top thing to see if there's any kind of signs of inflection, because I just think that that's the most important news factor. And then over the next week or so, I'm also very interested to see what the press reporting is going to be around the progress of Clarity. So I'm kind of shoving the economic data a little bit to second tier. When it comes to crypto, I'm focused more like tactically on ETF flows and Clarity Act news, because I think that's going to drive a lot of sentiment shift.
James, what's top of mind over on your side?
Yeah, I mean, just from an economic perspective, I mean, if I'm looking at Micron today, but that's not really something to look forward to. But they still keep blowing out earnings and all these things. The returns are kind of insane. So I'm watching to see if that ever. It feels very frothy, but it's not stopping at any point. So I'm kind of just watching for those things I was saying as taking attention away from crypto. Are we going to see any sort of topping signal? And the other thing I'd say, which other people have already said, is one, what's going on with Clarity? Is that actually going to potentially happen? Because that's the only catalyst I see in the near term. Because if you look around the world, most of the central banks, whether it's Bank of Japan or ECB, are hiking or talking about hiking. So obviously we know that oil prices are important. But yeah, I go back to the number one thing I'm paying attention to, which I think is kind of driving the market in crypto and mostly Bitcoin, is something we talked about a lot at the beginning of this, is what the hell is going on with strategy and what are they going to do? And there's some liquidity distinctions and moves they're going to have to make in the next year or so. And how is Saylor going to do that? But I don't know if that's something that's necessarily going to happen over the next week. But you can't not be paying attention to what's going on with stretch and strategy price.
Yeah, so safe to say you'll have that price chart up every day on these preferreds or on the stock.
Yeah, the preferreds is mostly what I'm paying attention to personally.
Yeah, that's good. Yeah, I mean, I want to echo what everybody kind of said. I think they're all really great answers. I think, as Tomas has pointed out, you're in a transition period with kind of like these inflation readings, and what's going on with the energy markets and how we're rating lower. So one thing that I'm going to keep an eye on is kind of these alternative data sets for inflation. I think the Cleveland Fed has a great alt data set for like a higher frequency tracker. And they publish it. I think every day you get a fresh number. So I'll have that bookmarked. I'm going to keep an eye out on that 1-year inflation swap on gas prices. Of course, it seems like every weekend we get a headline coming out of the negotiations from the U.S.-Iran deal that could significantly impact or derail some of our thesis, where we get to see that that peak rates, peak inflation start to build. But these are kind of like all the things top of mind, and yeah, just everything else that the rest of the crew here mentioned, I think is really, really strong. So I just want to thank everyone for joining us for another weekly live discussion here on markets. A lot of great stuff this time. So I think if you found this conversation useful, definitely share it, because I think there's a lot of great takes on this one. So thanks again for joining. Always do your own research, and be sure to trade safe. And until we speak again, thank you.